G'day everybody, welcome to the weekly general update for the 2nd and 3rd of June. And we had a pretty big week in the US, particularly on Friday night, with a significant fall and a significant break of key support. So that really has changed the game quite a bit in the last few days from a technical perspective. So let's have a look at the way that markets are setting up at the moment. Just a reminder, this is general advice only. So the action for the week, to summarise, the S&P in the end fell by 39 points on the week, so that's a big move. And the key level at 1290 that had previously held support was absolutely blown away on Friday night. That largely came from some general market nervousness, but also the jobs report was deemed to be pretty poor, a lot less than what people expected, and that really throws into question the economic recovery in the US. Mind you, corporately, America's still doing quite well, but at the jobs level, not so much. Now, the banking and small cap indices we'll take a look at. They were also pretty heavily sold down. They've been holding up very well. That was one of a number of indicators that I was looking at for the health of the US stock market. And basically, in the last couple of sessions, particularly Wednesday night and Friday night, that has changed things quite a lot. It's obvious now that capital is basically fleeing the stock market. As I said, there was a big move down on Wednesday night and again on Friday night, and that money is going into bonds, and that's been happening for the last several years. But what hasn't been happening is that money has been flowing into gold in a big way in the last 6 to 8 months, since the gold market peaked out at 1920. But on Friday night there was a big move back into gold, so that's indicating that people are really looking for other safe havens other than US government bonds. And there was a very large move in gold. Now, our market ended up rising by 34 points on the week, but that's really just a timing issue, particularly coming over from the previous week. We were down in advance of the US, and we will certainly lose quite a bit of ground on Monday morning. So that will certainly change by the time our markets open Monday morning. So I'm expecting somewhere between 60 and 100 points down. I think this is probably what you can expect. Now, commodity prices were down heavily on Friday night. Copper was down about 3%, oil was down nearly 4%, so some fairly significant moves. So our resource sector is going to get a bit of a whack on Monday. Consumer confidence in Australia really is pretty shot. It's impacting retailers, it's impacting the media, and it's certainly impacting some non-resource investment as well. So we really should be in better shape, but the consumer confidence is starting to become a bit of a self-fulfilling prophecy because people are so negative and concerned, they're not spending, and as a result of that, the numbers that we're seeing coming through in the economic data is not good, and that makes people even more depressed. So we're in a bit of a self-fulfilling spiral at the moment as far as the non-resource sector of the economy goes. Now, bond yields spiked heavily in the start of the week, but Spanish bond yields did come down the last couple of days a little bit, from 6.7 down to 6.53. I suspect that's probably only temporary, and what happens with Spain really will be a key trigger to financial markets over the next few weeks. So bond yields are still unsustainable in Spain. They're in deep trouble. The government's in trouble. The banks are in trouble, and it's hard to see an easy and quick resolution in Spain. Now, the US dollar, it rose very strongly, and we'll have a look at that chart, and it peaked out exactly at resistance level, and then reversed very hard on Friday night. So that was really quite interesting as well. So let's have a look at those couple of charts to start with. Excuse me. So we'll start first of all with the S&P. You can see we had what I interpreted for a number of reasons, looking at bond market spreads, looking at the internal health of the US stock market. I felt that it was highly likely that that the main trend was up and that this was just a three-wave correction. There's wave 1, wave 2 to the upside, wave 3 to the downside, which went to 1290, which was a 50% retracement of the move from the 28th of November, and was a 38.2% retracement of the major move from October last year. Those two levels lined up almost to the point, and the US market dropped to that level. Considerably oversold, started to bounce, broke to a new short-term high on Tuesday, and so everything looked fairly positive. It looked like the markets were going to resume their uptrend and head back up and challenge 1420. There was then an abrupt turnaround on Wednesday night, as you can see. A bit of a pause on Thursday night, and then it all let go on Friday in a fairly major way. That's a big down period, and you can see that it's bigger than any other session that we've seen on this screenshot. So now the question is, where will it go to? So now I believe that we're now going to get 5 waves to the downside. So we've had 1, 2, up, 3 down, 4th wave up, and we're now heading in a 5th wave to the downside, and that could well have started a bigger picture correction. We don't know that yet. We'll need some more information. So the target levels that I'm looking for, we've got a target level here at 12, call it 1260, and then we've got another one at 1248. So they're the areas that I would be looking for. The US index is oversold, so I would expect a bounce. If not on Monday night's session, then I would expect a bounce on Tuesday night's session. And so I don't think we'll have more than another day or so downside in our market. We'll get a bounce from there, but I think really that's going to be an opportunity to get short the market again. I would not be wanting to be buying anything much at this point in time, although obviously some gold stocks are a possibility, but they've already seen a bit of a rebound in the last week. Now let's have a look at the banking index in the US. As you can see, the banking index has been holding up really well, and that was why I was of the view that once we found support at 1290 on the S&P, that we would then bounce and head higher, but that all let go on Friday night, as you can see in a big way. The banking index sold off very, very sharply, and again, that's by far the biggest move that we've seen in this particular screenshot. Now let's have a look at the small caps, the Russell 2000, because that was also holding up very well. Again, another reason why I was reasonably relaxed about what was happening in the US, because I felt if a more major decline was around the corner, that the small caps would have been well and truly in downtrend. They've been holding up very, very nicely, but they've also let go on in the latter half of last week. So it would appear now extremely likely that we're going to see some lower levels from here. Look for a bounce first, and then lower from there. Now I mentioned the US dollar. Let's just pan back and see we had a peak. Just put that in there. So we had a peak back here in August of 2010, which was at 83.5, and then we've got another peak up there at about 88.5. You can see the US dollar went precisely to that level and then reversed quite hard on Friday night and came back down again. It is way overbought, so I would expect a bit of short-term downside in the US dollar, and typically we would expect to see the US dollar and the US stock market go in opposite directions. So that's why that was a little surprising on Friday night, because it's closed on its lows, but so did the stock market, so that's a little bit unusual. So US dollar will be highly important for the stock market for the next couple of days, so we need to watch those fairly closely as well. Now, another indicator that I've been looking at is the VIX index, the VXO, and again, one of the reasons that I was relaxed about the US market was that we were still hanging around the 20 to 23 mark on the VIX, which is really relatively low, particularly considering the sentiment around the world, which is generally pretty nasty. So for the VIX to still be around 21s and 22s just indicated there was very little fear in the market. But you can see on Friday night that really did kick up. We got up to 26.5, and anything up around 30 and above really is indicating a fair amount of fear in the market. So quite a big up move in the VIX to basically confirm that change in sentiment. So I guess what I'm seeing here is definitely a change in sentiment. It's not just that the market went down on Friday night, it's that sentiment really does appear to have changed. And once sentiment changes, that will tend to sustain the mood for the market for a longer period of time. So we may see some bounces, but I think in the near term we might be seeing some more consistent downside. Now let's have a look at gold. First of all, on the daily chart. So you can see here, big move on Friday night. It was up about $60, and basically that was the entire gain for the week in gold. Now, it was a huge move as people moved back into gold looking for a safe haven. So at this point in time, you can see that the 1550 level has basically held. Going back to these peaks back here, and that was quite a strong move from oversold on Friday night. So gold up $53 net on the week, with all of it Friday night. And there was also very large and positive moves on the other gold indices as well, the Huey index and also the GDX index as well. And we'll take a look at those in a minute. Oil was also down in a major way, down $8 on the week. That's been a huge move in oil. And we're getting down towards support. It's about 83 at the moment. And with some support around about $80 for light sweet crude. Copper also finished down $3.34, but really, to my mind, it looked to just be currency impact only because the US dollar was rising. So really not down that much. And if you have a look at the spot copper chart here for the last 6 months, you can see we've certainly lost some ground. We've come down from $3.90 down to $3.34 in the last basically 3 weeks. But it's not a dramatic fall. It hasn't absolutely fallen off a cliff, and $3.34 is still very profitable territory for 90% of copper miners around the world. So let's just have a look at a couple of those charts. So we looked at gold. Let's have a look at the Huey index as an indication of where gold stocks might be. So despite the fact that the general stock market got absolutely smashed on Friday night, you can see this is the index of the major unhedged gold miners in the US. And you can see that was a big move. So when the stock market is down well in excess of 2% and this index moves up, that should translate through quite nicely into our gold stocks on Monday morning and into next week. But as you can see, we already had the reversal underway. I talked about that in last weekend's video. The reversal really started back on the 17th of May. So there's already gold stocks have started moving well before the price of gold did, which is a phenomenon that happens a lot. This is a weekly chart on the GDX. You can see a very good move last week on the GDX as well, and big volume kicking in as well. So this is a major move now back into gold stocks, and it's been a long time coming. We've been talking about this for months, but it would appear that it's with us now, and there's certainly going to be some opportunities to buy some good gold stocks. But I would absolutely stay with gold producers. Personally, I wouldn't be touching any of the explorers at the moment. not in this kind of market environment. Stick with companies that are actually profitable and are producing money, producing cash flow. So, there was one other chart I was going to show. So let's have a look at oil. This is Brent crude. Let's put this. It's on a weekly chart, so you can see Brent crude has been trading in the range between 100 and about $128 a barrel, which goes back about 13 or 14 months. And you can see there's been quite a significant move down. We're now down to the bottom of that range and starting to get oversold quite heavily. So you'd have to think that we're not far away from a bit of a turn up in oil. This is light sweet crude. Again, on a weekly chart, the range has been about 78 to about 112, 113 was the peak. And you can see we've come off basically just in the last March, April, May, in the last 3 months. We've come off from $111 and now we're down at 83. It's been a very, very substantial move. But look for a bounce in oil not too far away. Now let's have a look at our index just for the record. I don't really follow our index too much. I think it's pretty much irrelevant. It's just telling you about the banks and BHP really. But you can see it's been basically in a short-term trading range from just a tick over 4,000 to about 4,140 over the last 10 trading days or so. That will all change. We'll be down around this 4,000 mark on Monday and possibly dip below 4,000 on Monday. Let's just have a look at the finance index. So it pretty much mirrors what's been going on there. And materials also didn't have a good day, and you can see materials really have been in more of a downtrend. And it's really materials that have been dragging the overall index down. I think that's all the charts that I want to look at. So just one final slide on strategy, looking at the S&P index. 1290 broke very decisively, so the bias must be to the downside now. When it comes to Aussie stocks, you really should be biased to the short side. If you're not into short selling, then you basically should be pretty much out of the market, in my view, because other than a few very specific stocks, I don't know in the short term that the reward warrants the risk to be only on the long side. Gold stocks are certainly performing better for now, but there would have already been a bit of a price rise already factored into some of those stocks. So still a bit of care needed, and any small caps I'd be looking at buying from oversold for a bounce only. Take the cash and get back out again pretty quickly. So that's it for this week. Talk to you again next weekend. Cheers.